Hi, this is Jack at Alpha Charge 365 with a state of the market update. Before we get started, this is not a recommendation to buy, sell, or hold any stock or security. This is for informational purposes only. So let's go ahead and get started. So we had a news-driven market this week, New Year. We had some issues with Iran in the Middle East, but we're going to just look at price and trend and see what it's telling us. So as we always do, we start with the SPX, and we hit an all-time high, and then we've pulled back a little bit. Now, what I'm going to do here is I'm just going to draw a measure from where we are to the that's the 150-day EMA. And it's about 6.5%, which is a little bit extended. So again, this would be a normal place for price to maybe consolidate sideways or pull back a little bit and then continue higher. And I say continue higher because the trend currently is higher, right? All the moving averages are aligned up and moving higher. And there's no reason to think that this wouldn't just be a normal consolidation or check back and move higher situation. All right, so let's move on to the Qs. Qs, exactly the same thing, right? So what are we seeing here? Literally the exact same thing. We're going to measure this out too. And you'll see the Qs are actually even a little bit more extended, almost 9% from the 150-day EMA. Again, I'm not saying it's going to check back all the way to here, even though it could, but it may check back, to the 23-day EMA, the 65-day EMA, or any place it wants to in between, and or it could just go sideways, right? Just do a little sideways flat base right here, and then let these moving averages catch up. Now the Russell, it broke out of its range. It was a very nice long range, and it now is still above all its moving averages. If it checks back here, it's it has not quite moved quite as far as the other ones. And measuring back, and this one is only about 5%, right? So yeah, it could come in 3, 4, 5% easily, retest this area, right? This 160-ish, and then that'd be and then if it holds, super strong move would be coming in that. So again, just some possibilities that could happen, right? I mean, almost anything can happen, but I still think that this comes back in maybe a little bit more, and then we eventually will, at the minimum, test these all-time highs. Moving on to Dow Jones. Here we go. Again, nice, clean, clear breakout, right? Boom, 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 boom. Again, just looking at how extended it got. We're talking about, not too bad, 4.4%. So a little sideways action, a little pullback. It would be totally normal. Nothing wrong with that. That's the way the markets work, right? So that's kind of what I'm watching for the major averages. Let's look at a couple important subsectors. For me, the most important ones are financials. There's two total financials being one of them. Again, huge place where the financials are at. We're talking about the 07, 08 highs right here, right? 07 highs, right? Retested here, backed off, retesting it again here. So looking at the chart currently, right? Now I drew these arrows in a few weeks ago, right? When this started to come up to this level here, I said, what would be normal? Normal would be for this to either hit this level, move sideways, or pull back a little bit and then break out. That would be for the strong move. Again, it needs to let these moving averages kind of catch up. It got away from itself a little bit, Looking here, we are still 6.75-ish above the 150-day EMA. So yeah, it could continue to move sideways. It could now pull back a little bit if it wanted to this 29.75-ish area where the 65-day EMA is, and then a pop, and then a breakout. That would be the super strong move. All the moving averages, like everything we've seen so far, are trending higher and lined up. So as of right now, there's nothing to be bearish about, right? Now, we change our mind as the facts change. If these moving averages start to flatten out or they start to cross back over to the downside, then our stance would change also. But for now, there's nothing to be bearish about, in my opinion. SMH, Semiconductors, just a beautiful, beautiful uptrend going on there. It just shows that people aren't afraid to be about growth and the economy or anything like that, because semiconductors are in every part of our economy. So if they think that there's going to be a slowdown, we would probably see it in semiconductors. It is extended 13% from the 150-day EMA. All right. So sideways action, pullback. Again, all these charts, that would be totally normal, especially after, amazing runs. Now, again, it's not like this can't pull back. Boom. Look here in April, May, June, all the way April, May to June. Right? Then it popped back up. And then another smaller pullback, right? The month of July was pretty rough. But now it's kind of come back. So it wouldn't be, these pullbacks are normal. It does it quite often. If you look at here, right? That was a big one. Here. So yeah, semiconductors can pull back to this, 135 level. That would be right in line with its character. Moving on. Now, lumber is another one I like to look at. Again, this is a very forward-looking indicator. That's the way I use it, at least. And it broke out, which I was super excited for. And now it's come back into this supply area. If this does break down here, it would probably get me, we'll call it cautious going forward. Again, over the next 3 to 6 months, just because it tends to lead things to the economy and the market to the upside and to the downside. Okay, so it's just something to watch. I do love watching lumber. It's been pretty good right here. It kind of foretold. It totally led the late 2018 correction again, but there's a lot of lag time, so it's not like this immediate indicator. It's just one little piece of the puzzle that I use. All right, we're going to switch to the line chart now, and we're going to look at some things here. The put call, equity only put call. So right now, people are still optimistic, right? We're not exuberant, but we're not that far away from exuberant either. This can go on for a while. So nothing that says that we can't be in this range for a while, but the expectation would be that something's going to happen in the market that's going to reset this and put it closer to that 1 level, right? Or to 1.2 or somewhere around there. It always has, right? Every time we've gone frothy, we reset. Boom. We get frothy, we reset. We get frothy, we reset. We get frothy, we reset. We get frothy, came back to close to that 1 level. So we're kind of in that frothy range again. Not super, super crazy, but it's there, and we've been there for a little while now. So a reset here, a little shakeout, get rid of that excessive bullishness, and then the markets could potentially go higher. Looking at the next chart, SPX TLT. So the question is, are we in risk assets or are we in safe haven assets, right? SPX or government bonds. So we had the nice breakout and it moved higher, and now after the news with Iran, it kind of came back in. People kind of rushed into some safe haven assets. That would be normal. But if you look at this, the trend for this is all higher, right? Everything is higher. Everything's moving higher. I still think risk assets are the place to be until we can see this full turnover. Now you see just a little bit of flattening in the shorter term moving average. Doesn't really mean much to me yet. Where price is still above it, but this is something to watch, right? Just something to watch. Now, if we start seeing this price breaking below these moving averages and these to turn over, this ratio, again, it's just an indicator, right? We're not buying or selling this. You could buy the TLT or the SPY, but this is just tells you risk on, risk off, right? That's what I'm looking for here. Next up is the VIX. So how much, fear, is in the market. Again, we look to the put-call ratio. Again, it's a derivative of the put-call ratio, and we're still seeing that it's in a very healthy range, right? It's still in a bullish range. So there's nothing that I'm worried about here. Now, if we get above, for me, 16.5 tends to be my line in the sand, right? Above 16.5, and things are getting dicey out there usually. Below 16.5, and I would call that, optimistic for the bulls, right? Optimistic for the bulls below 16.5, and a little more optimistic for the bears above 16.5. The next chart I want to take a look at is going to be the SPX versus the rest of the world minus the SPX. Okay, so where in the world is it going to be best to put your money? In the United States or outside the United States? And so as we can see, this is the uptrend goes back to 2010, right? So it's an amazing uptrend. So we've wanted to be in the United States pretty much the entire time for the last decade. And we're right at all-time highs. So in my opinion, being in the United States is still the right place to be if you're going to be in risk assets. And you see the moving averages are all moving higher. Everything looks like the US is the place to be. Again, if we see this start to roll over, then we're going to look at other country ETFs, whether it be China or any place else in the world, we don't care where, and see where the outperformance may occur. But as of right now, the US still seems to be the place to put risk assets. And then let's look at one breadth indicator I look at, which is the value line geometric index. All right, let's go out, just look a little further. This thing going back to 98 has had resistance, we'll call that support because it popped right back up, support. And now, what is it doing? It found this little level right here where it kind of had a little bit of resistance. Again, this is for the medium stock, and so it's a nice measure of breadth, and it's hitting a little bit of resistance here. So yeah, just very similar to the financials. It had a nice run. Would make sense for it to move sideways, pull back, and then pop out. Again, a breakout in the value line geometric index would be a very, very bullish continuation for the market overall. And it just looks like it needs a little time to rest. Nothing bearish about this chart. And really nothing bearish, at least not yet, about any of the charts that I looked at today. So as of today, which is January 5th, 2020, Sunday, nothing is, everything looks fine. Now, markets tend to take the escalator up and the elevator down, right? So going back to the SPX where we started, we can, we took the stair stepping up, but the down happens very quickly. So we do need to watch out for if these moving averages start to break, if they start to roll over, start to cross each other, right? Right? If we get out here, well, we'd rather get out here than here, right? So that's what we're going to avoid. We want to avoid this, even if we have to take this, because for all we know, we could be here, right? And then we're going to miss this if we're out of the market. So that's just the way I'm viewing the market as of today. My views can change at any moment. I'm going to remain flexible and nimble if I see the environment change. Good luck trading this week, guys, and take care.